It is now up to members of the U.S. Senate to decide what happens with the nation's debt ceiling. The House voted to pass a $1.5 trillion package, but the deal to avoid a debt default still faces a long road ahead. So how can you protect your money? Patrick Cornell has a closer look.
As lawmakers work to avoid the first ever U.S. debt default, what does it mean for your finances, and what can you do to protect your money amid all the uncertainty in Washington?
A breach of the debt limit would be catastrophic to the financial system and the economy.
Economists say if lawmakers fail to reach a deal to raise the debt ceiling, the U.S. would fail to pay back its debts and interest payments on national debt, which could disrupt Social Security payments, veterans benefits, and federal employee salaries.
The longer it goes on, the more people aren't going to get paid, and the more chaos that will create throughout the economy.
Experts say if you depend on government programs, take time to come up with a backup plan in case you lose access to those benefits. Also, this is a great time to revisit your budget or create one if you don't have one and find opportunities to save more money.
The dysfunction that we're observing in Washington is very disconcerting and suggests that the lawmakers just aren't going to be able to get it together in a timely way.
If there is a default, the economic ramifications could be widespread. Economists say any ding on the U.S. credit rating would likely raise interest rates on mortgages, car loans, and other types of debt to account for additional risk. And then there's the possibility of stock market volatility. While the effects haven't lasted long, past debt ceiling crises have derailed markets, including back in 2011 when the S&P 500 shed 17%. For Consumer Watch, I'm Patrick Cornell.